And are you gonna drop that deck? Hey guys, thanks for being here. Welcome to the latest token holder presentation. So we started this initiative back in September of last year, kind of the first one. I think it was helpful, really aspiring to provide as much transparency as possible to the community, talk about what's happening and take questions as well. So we're changing up the format a little this year, be a little more interactive. We'll have Lucas joining us in a few minutes, dig into everything that has happened on BAM. But in general, thanks a lot for being here. Really appreciate it. And so we'll dig into it right now, but also if you have feedback after this on like ways to improve our communication with the broader community, always open to that. So for now, we will get into it. And if you want to throw the deck on, then we can start there. Okay, yeah, here we are. So first is just disclaimer. We'll let you read this on your own time. Only important note here on the disclaimer is this is individual views of Jito Network contributors and nothing here is financial advice. On the agenda, we will start with just kind of financials of like what is happening with Jito protocol revenue. Then we'll dig into what is that protocol revenue being used for. Then kind of talk about the two core verticals of the Jito network, which are block building and then JitoSOL. And lastly, we have a good lineup of questions from different community members that we'll be talking about. So starting off on financials, we talked about this at length on the September call. So anyone who's kind of newer to Jito would encourage you to go back and look at that September call, kind of talks about all of the dynamics of how JTO works, the alignment from all kind of contributors to Jito with the DAO and how it's kind of what I would think of as like, true token ownership over these assets. So won't get into that here, but we'll just touch upon kind of what are the two core drivers of fees that go to the Jito network. So the first one is block building. That is 6% of total Jito tips. And we'll also layer in priority fees with BAM section, which we will talk about later. And one note, since this isn't really that well kind of known, I think, from my conversations with the community, but 15 bips of that overall 6% does go to stake JTO holders. And so if you are a long-term holder, you want to get yield in an auto-compounded fashion on your JTO, free to stake that JTO. There's some links and discussion on it on the Jito.network website. Feel free to check it out. The other portion of it is JitoSOL fee. This is fairly straightforward. It is just 4% of all yield that is distributed to JitoSOL. So it's a combination of both staking yield and MEV yield, and it is 4% of that. And then lastly, which is an exciting protocol revenue source, is BAM plugin fees. That is an emerging source that will kind of be part of the broader BAM rollout later this year. So here's a slide that shows the two kind of pieces broken out of that protocol revenue over the last year or so. You can see in purple is JitoSOL fees, in kind of greenish is Jito tip fees / block building revenue. So we talked about this a quarter ago. Here are the latest numbers. I think the first thing that like sticks off the page to anyone, which is that kind of the block building revenue is down. And that is really just a byproduct of Solana network activity is down across the board. And I think, I personally am extremely bullish on Jito economic activity. I think we believe strongly in the internet capital markets vision for Solana. But part of that is that it's volatile, and that's just inherent in Jito's economic model. And so this, is something that we think can grow a lot over time with Solana's growth, partially powered by the improvements that BAM is creating for the network. But it's also just a fact that it's going to be volatile. It was extremely high in the first half of 2025. Meme coin activity, overall trading, arbitrage, all of that were active. Now it is depressed, but it's a cyclical kind of fee stream, and think it has room to improve. But it also, this chart kind of shows the benefits of the Jito economic model of diversified revenue streams. So you can see the purple one, it did not have kind of those massive spikes earlier in the year. It's been relatively consistent. And so that's just kind of the beauty of it. As I said, it's think of like dollar-based TVL in JitoSOL times yield times 4%. And so it didn't spike as much earlier in the prior year, but it also hasn't really declined. And so it provides kind of a balance where there is consistent revenue generation. And during really busy times on Solana, block building revenue probably going to be higher. But in times like now that are depressed, there'll be ongoing fees from JitoSOL revenue. So that's kind of what revenue is coming in. Now moving into what is happening with those fees. And this has been a topic of fairly active conversation over the last year, really. So like originally in Jito's history, all of the fees just flowed through to the DAO and kind of sat in the DAO treasury. I think we got good feedback from the community at the start of last year that was not really the best use of capital, and that just revenue sitting in a DAO account doesn't make a ton of sense for the network. And so there were very lengthy discussions with the community, a lot of good input throughout the first half of last year on kind of what should these fees be used for. And there was this group called the Crypto Economics Sub-DAO that was formed after that discussion. It's a group of 5 individuals really in the trenches on thinking about ways to return value to JTO stakeholders. And so last year was all kind of about value accrual to JTO token holders. And there was a buyback program that was set up as part of that. And so in total, so far, there was like 15 separate tranches of buybacks, in aggregate over $8 million. And that was all burned. So roughly 3% of total Jito supply has been burned so far. And that was one, just the benefit of kind of distributing value to token holders. But then a second full benefit of it was experimentation and learning from that process. And so you can see, if you look at the chart, there's like different tranches of size, pacing, all of that stuff. You can see in particular, it stepped up a lot during kind of the market drawdown towards the later innings of last year. And so this is going to be an iterative process. Expect a very long time horizon for returning value to stakeholders, and the Crypto Economics Sub-DAO learned a lot from this, in addition to actually returning this value to continue iterating. There's something called the autonomous treasury stack, which I'm not going to get into the kind of the weeds of that on this call, but it's a very cool concept of kind of protocolizing all of this behavior. It looks a little reminiscent of kind of some of the Uniswap auction mechanism that has been happening. That is going to continue to be tested in the first half of this year, and then hopefully rolled out in Q3 of this year. But to those that are interested in it, there's a lot of discussion on the forums. Crypto Economics Sub-DAO would be happy to engage and take other ideas. But it's really kind of on the cutting edge of what is happening with crypto economics. And so in general, I think CSD has been doing a good job able to capitalize on kind of depressed market activity on Solana and market prices in general for tokens like Jito. And so been a good exercise, but now it's kind of transitioning into BAM adoption incentives. And so, we'll talk about BAM in a few minutes, but, it is one of the kind of biggest growth areas, certainly for Jito in 2026, and hopefully on a longer term time horizon. And there are 2 different economic levers that Jito DAO has adopted to encourage BAM adoption. The first is kind of JIP28, which in short, JitoSOL is a pool of roughly 15 million SOL, and it gives outsized delegation to validators that are running the BAM software. This is beneficial for JitoSOL because BAM yields are actually higher than any other yields on default validator clients. But it's also beneficial for the Jito Network because validators are incentivized primarily by stake. And so when they get more stake for doing a certain activity, they're more likely to do it. And we've seen a good amount of validators opting into this to benefit from the outsized stake delegation from JitoSOL that BAM provides. The second one, which was approved by the Jito DAO earlier this year and was actually implemented in the last few days, is a different governance proposal, which redirects all Jito protocol fees to validators running the BAM software. And so this is effectively kind of an early adopter incentive for those running BAM. And this is, kind of some interesting dynamics here. First is, as you can imagine, you have 100% of Jito Network fees flowing to them. And so the earlier validators adopt this, the smaller the pool of validators there are. And so it really provides kind of first mover advantage for validators willing to run this software. And then it will just kind of continue to scale, create the network effect, that there is some level of, activation energy for validators to change what software they run. And we think this does a good job providing that. We'll talk shortly about kind of what is happening on BAM validator adoption, but the early signs of this are quite strong. And this is time boxed explicitly. So it starts to taper immediately, starting June 30 of this year. tapering linearly through Q3. And so I think it's quite substantial fees for validators, but it's also value accretive for Jito as well as Solana with it. And then lastly, I think this is just a testament to kind of the nimbleness of Jito DAO and the foresight of the community. Last year, took steps to distribute value to token holders. This year, found an attractive reinvestment opportunity for the DAO and immediately was able to pivot from kind of value distribution to reinvestment and likely kind of continue to toggle back and forth between those as whatever makes most sense for Jito DAO at any given point in time. So now we will get into the block building update, and I'll have Lucas come up here and go through that process. So I think everyone on this call should know, but I guess, Lucas, do you want to give a 5-second introduction for yourself for anyone who isn't familiar?
Yeah. My name is Lucas. I'm co-founder and CEO at Jito. Started Jito in 2021. So yeah, I think we're going to dive into BAM updates here and share some more on the engineering side of things. If you want to pull up that deck real quick.
Yep.
Cool. So yeah, BAM is our next generation block builder. We think that Solana needs verifiable markets, and there's a lot of opportunity to add more customization to the way that Solana works and the scheduling. So yeah, we've been working on BAM for about a year now, and there's a few features that we're exploring in here. One is application controlled execution. There's like MEV protection, more custom features for prop AMMs that I'll get into in a second. And the goal is to fully open source it later this year. And we'll also have multiple operators running it. So it's not just Jito Labs running it. It can be one of the many infrastructure providers. And so, yeah, we've been kind of focused on like bootstrap and engineering efforts just to make BAM pretty performant in terms of block rewards and tips and transactions and cost units and all that. But we're starting to spend more time on plugins. And so, yeah, we have a lot of interest from prop AMMs, perp dexes, oracles, other things that want to build completely new features for their users and applications. So BAM is basically an upgrade for apps, and it lets them do many things that they couldn't do before. So we're really excited to explore that design space. We have a lot of people that are just sending us ideas nonstop, and we really just can't keep up. So trying to be pretty sensitive about prioritization and figuring out what the best bang for the buck is, essentially. So yeah, this is a chart of the adoption of BAM over the past few months. So today there's around 265 validators running BAM. This is roughly 30% of validators on the network running BAM. And we've just been spending a lot of time talking to validators, understanding their pain points, trying to tell them about BAM and do a lot of education. Also a lot of education on the staker side as well on how BAM can make applications way better and just unlock kind of a new era of innovation on Solana. And then today we're right around 75 million SOL staked. This is roughly 17% of total stake on the network. And so I think we're really starting to see, for a while, we kind of had this like chicken and egg problem with plugins where we have this crazy demand from all these apps and they need the block space to run their special logic. And I think now it really starts to make sense to kind of experiment with these things and move fast on that. So yeah, we're pretty excited about that. And definitely going to keep focusing on the growth here. So yeah, BAM plugins, it's kind of a broad concept. You can kind of think of it like special logic inside of Solana schedulers that enable applications and market makers to do new things that create value on Solana. So we've been talking to a lot of prop AMMs and market makers. You can see all these logos down at the bottom. These are people that we've been talking to. So yeah, like BisonFi, DFlow, Drift, Argonia, Phoenix, Switchboard, and many others. Really trying to figure out like what the pain points are for prop AMMs and like, hey, if you could build a scheduler that made your life easier, but added features to the scheduler, what would that be? And so, yeah, the thing that we're really focusing on right now is like more frequent and precise and deterministic Oracle updates. And ultimately, what that will result in is just better prices for users. So we want Solana to be the internet capital markets. We want it to be the place where every asset's traded. You can get the best prices, better than sexes. And so that's really what we're focused on with this first plugin, specifically on prop AMMs. So this means like cheaper update fees for them, tighter spreads, so they get more volume, less reverts, lower costs, just like less headaches sending transactions. We can kind of take some of the load off them and do some more custom scheduling inside the scheduler. And so, yeah, we are pretty close to a design here, and we're going to start implementation on that like this week or next week. So that should be live soon. So if you're watching this, you're a prop AMM, you want to learn more about this, then feel free to hit us up. And then, yeah, we're also talking to some of the aggregators about better sequencing, better routing, ultimately, it's just about better prices. Like, how can we give users the best price? And so this is really kind of the mindset that we're thinking about with BAM. It's less about like trying to go max extract or like really increase the rewards beyond what we think is reasonable. It's more focused on like, how do we make the best apps on Solana? And how do we unlock new use cases that don't exist today? Yeah, there's a massive opportunity for plugins. We're focusing a lot on prop AMMs right now. Yeah, there's been around $42 billion in trading volume over the last 4 weeks on prop AMMs, or just generally. And they're roughly 73% of DEX volume today. And so we think that from talking to a lot of prop AMMs, there's a lot of kind of challenges with working on Solana, like transaction landing. How does the scheduler work? It's kind of like there's a black box, and it's can be kind of hard to figure out what's going on. So yeah, we just think that we're going to focus on making this super easy for prop AMMs. That will make it easier for more market makers to come on Solana and really kind of lower the barriers to entry for market making on Solana. And yeah, we're very optimistic this will increase trading volumes even more. So yeah, if people have tighter spreads, then should have more trading volume. So yeah, the past, I would say like Q4 2025, we were really focused on performance and stability. So making sure the BAM nodes are producing blocks that are similar in capacity to the normal Jito, Solana, and Agave schedulers. And I think we're pretty good there. There's still some more work to do, but we're pretty happy with the performance so far. And yeah, I think we started out with like 3 BAM nodes that we're running. Now we're running around 10 with more regions soon. So we need to kind of distribute that a little bit more. And then we also released the BAM Explorer. So check that out. It's at bam.dev. And you can go read more about BAM, see what validator is connected, what region they're connected to, and all that. In first quarter of this year, we're really focusing on increasing the performance even more. So we are kind of looking at the BAM node a lot, doing a lot of system tuning on the trusted execution environment to make it even faster, increasing rewards, increasing performance, decreasing latency. And along with that, we're working on the plugins. So the first plugin will just be focused on prop AMMs. So yeah, we're starting, as I mentioned earlier, we'll have a design for that pretty soon, and then start implementation on that once we're happy with the feedback from prop AMMs on the previous slide. Another feature that's been heavily requested is a FireDancer compatible BAM client. So we have one of our engineers working on FireBAM, and we're making pretty good progress on that. It's in early testing on testnet, and hopefully we'll be live on mainnet pretty early on, within the next few weeks here, and then go into audit and all that. So yeah, we're pretty excited about that, and we know a lot of validators are waiting for that to come online. So that should bring a lot more stake. And then yeah, we are one of the key. There's a few like key properties that we think are important for BAM. I think open source is one of them. So people know how the system works. It's verifiable, so you can trust it, and you know the rules aren't changing out from underneath you. The other one is getting more people to run it. Like this is really an ecosystem thing. It's like, how do we make the best apps on Solana, and how do we kind of have more people running BAM and getting involved in BAM? And so pretty close in timeline to open sourcing BAM, we will be inviting third parties to operate BAM nodes on testnet. And so been doing a lot of time doing the performance tuning and all that stuff, but also thinking about how to make it easy for operators to run it. How do we make it cheap? How do we make it performant, like make the compute requirements low? And how do we make it reliable and like all the alerting and whatnot? But yeah, there's hopefully we'll get to that this quarter and get more people running it, so that it's not just a Jito thing, it's an ecosystem thing. Cool. So I'll pass it back to Brian. He'll be doing a JitoSOL update.
Yeah, we'll talk about JitoSOL, and then we'll have Q&A in a few minutes, which, as you can imagine, a lot of the questions touch upon BAM. And so we'll have Lucas back up here in a minute or two and talk about kind of BAM as well as the other questions that we have from community members. So on the JitoSOL side, here are just the high-level charts. So you can see JitoSOL TVL. It took a fairly substantial dip in the second half of 2025. I would say this is attributed to a few things. Obviously, the market was pretty volatile and mostly volatile in the downside direction during that period. So I think there was just a lot of turnover amongst StakeSOL holders, and especially people who are more actively trading. JitoSOL is the best way to trade Solana while remaining all the yield attributes. And so it was understandably hit by turnover among those constituencies. And that was kind of reflected in the downward trend you see in kind of Q3. I think what is optimistic is you see in Q4 kind of that stopped and leveled off fairly significantly. And there's also been, I would say, some upward trajectory off of that baseline. So we think a lot of the kind of, faster money, shorter term holders of JitoSOL are out of the system at this point. And so it's a strong base to increase from here. And then say the chart on the right is LST market share for some relevant LSTs. And I think this provides another view, right? I mean, if you're looking at the overall TVL, it's like, oh, kind of what is happening to JitoSOL TVL. There is some kind of decrease there. But when you look at the actual market share, I think it tells somewhat of a different story, that in aggregate, LST market share of kind of like relevant LSTs is actually flat to up over the last 2 years. And so it's not really a matter of JitoSOL losing market share amongst these LSTs, but it's more so just kind of, again, there's been obviously some share shift from LSTs to native stake. But JitoSOL, especially if you consider kind of the kind of two other, I would say, general use case LSTs in the market, JitoSOL is actually gaining share towards those. And so that is, always relevant to think of these in context, but obviously there is work to do on JitoSOL TVL, which we'll get into kind of the strategy around that here. So talked pretty extensively in the Q3 call in September about the institutional market. We've also put out a lot of content on here. I won't rehash all of that in detail, but I think some relevant data points are, one, that, this market is real and it's definitely sizable, right? Just if you look at like Blockworks dashboards on what is currently in kind of what I would consider institutional use cases today, there's about 15 million SOL in DATs alone. There's another 10 million SOL in kind of US ETPs. So this even excludes some of the like overseas ETPs. So that's like 25 million, or roughly 13% of total stake SOL in institutional hands today. I think you could pretty conservatively say that doubles by, end of 2026 or so, which makes it over 25% of total SOL stake. And, realistically and somewhat disappointingly, I would say JitoSOL's penetration in that market today is very, very low, which is certainly not exciting in the sense that we haven't captured that off the bat. But I would say it is exciting because I believe that JitoSOL is the best LST by far and provides a lot of utility to these stakeholders. A lot of the work has already been done, whether you think of off-chain liquidity via large centralized exchanges, custodian integrations, all of that stuff is set. And so the actual adoption is a little slower in that market than I would have expected, but think that JitoSOL is still well placed. And 2026 is really the time period for realizing the TVL that we know is there and that can benefit a lot from JitoSOL. And so ongoing conversations there. We'll talk about ETFs on the next slide and what is happening there. But that is the primary focus for JitoSOL, especially because the DeFi environment right now is not super active. Obviously, there's some cool protocols, whether it's Hilo or others, that are really leveraging JitoSOL to kind of make new kind of primitives on Solana. And JitoSOL will still be the LST of choice for those stakeholders. But the most activity and the biggest growing TAM is in these institutional stakeholders. The biggest lever that is available to JitoSOL, which was passed in Q4 of this year and is rolling out with certain stakeholders now, is directed staking. There is a tension historically of people that have a lot of SOL typically run their own validators. They profit from the stake on those validators. That disincentivizes them from using an LST like JitoSOL was historically, because that they lose the stake on their validators. It's distributed to all of these other stakeholders. Directed staking is a way for these parties to retain the stake on their validators while getting the liquid format of JitoSOL that they can use for all sorts of trading, collateral, option strategies, and everything else. And so I continue to be extremely bullish on directed staking as a way to get JitoSOL, especially into DATs and similar stakeholders like that. Other things that are happening on the JitoSOL side, there is kind of revised liquidity mining budget for JTO incentives for DeFi activity. JitoSOL has the best liquidity and is the best token for all of Solana DeFi. But in this market, I think the Jito DAO has been fairly conservative on JTO incentives, but it's just a good time to refresh and see areas to tighten that up and make sure minimizing kind of spend on emissions for JTO to make sure that there is a very high ROI to the protocol from any sort of incentive spend. So that should be coming out, I think, in the next couple of weeks. And then paired with that is there are substantial amounts of JTO as well as JitoSOL in the Jito DAO. And so using protocol-owned liquidity to substitute some of the stuff that was being incentivized, which makes it just much cheaper that instead of having to incentivize certain third-party liquidity, you can just use idle assets in the Jito DAO treasury. So all of this kind of looking as well at new centralized exchange as well as DeFi integrations that just make JitoSOL continue to grow and be prevalent across kind of both DeFi and CeFi venues. So last one is kind of ETFs. We talked at length, and people that are in the Jito community have probably seen discussions around the VanEck 100% JitoSOL ETF in the US. That unfortunately got bogged down for a variety of government shutdown as well as kind of like SEC procedural reasons. I will not kind of get into all of the nuance there because that could take forever. But needless to say, like, it has taken longer. It's pretty disappointing. But it's continuing to progress forward. It will be launched sometime this year, I feel confident, but that it is not going to be on the expedited timeline that we hoped. But we still believe that is a very, very core product. And as soon as that gets out, it also opens a door for integration in a lot of other in a lot of other ETFs in the US market. So that is kind of the purple on the left you can see. Then I think I would also just say that the scope isn't just getting JitoSOL in US ETF products. It's, every major financial market in the world should have an easy local way for institutional investors to access JitoSOL. So the other logical market is Europe, because there is precedent for general stake Solana ETPs there. There is no format of 100% JitoSOL ETP there. And so I think there will be news very soon about kind of a very interesting product launch in Europe using JitoSOL in the ETP format. And that can happen in a timely manner. And so that's cool to see. And then I would say there's other regions that earlier stage conversations are happening. And so again, this looks like something in the Emirates. This looks like something in the Hong Kong or China area. And then lastly, kind of in the Korean market, and then maybe in the future, others, Japan. There are all these markets. They're all local, don't necessarily have access to like US ETF products. And so there is a lot of effort behind the scenes in just opening the door for investors anywhere to get access to JitoSOL. So in summary, all of this, I think 2025 was a pivotal year, a lot of highs and lows on what happened, but kind of aligned all of the incentives to direct revenue to Jito DAO, created this framework for value accrual to the JTO token with the token economic sub DAO. JitoSOL foundation was laid for all of the institutional stuff that I just talked about. 2026 is the year of like actually delivering on the TVL that those efforts should make. And then 2026 is really also just the year of BAM, getting that kind of broad adoption on Solana mainnet, letting Solana benefit from new applications that are really only possible through BAM, and then seeing that increase overall network activity for Solana and hopefully incremental value capture by Jito DAO. So with that, I will get into the Q&A. So if you want to hop back up here, Lucas. Yep. So what is a very popular BAM related question is, this format of it is submitted by Solomon, who is a longtime and very active Jito community member. Thanks for the question, Solomon. But it is kind of Anza, and anyone who's been checking Twitter lately in the Solana world has seen a lot of talk about kind of multiple concurrent proposers, i.e. MCP, launching this year. How do you think about BAM kind of evolving or coexisting with MCP once that arrives on Solana?
Yeah. I think that MCP timeline is pretty optimistic. I would say probably within the next 2 or 3 years it'll be live. But even before then, we're definitely thinking about ways that BAM will fit in. And I think we're still waiting for the final MCP design, but BAM offers a few things. It offers like customizability on the scheduler and the ability to basically change the way that transactions are ordered. Obviously, this will look way different in MCP world, and we have some ideas here, but we're really just waiting for a final design and like roadmap from Anza on how we ship it. But yeah, there's that side which can you can kind of like influence the ordering still through MCP, and then there's a few other things like the privacy component in BAM is pretty valuable. I think privacy is a pretty hot narrative. Thanks to trusted execution environments, we were able to basically run these servers and not see any of the contents. And so there's likely angles there. But I would say we're definitely like thinking about it, and the timeline's probably longer than a year. And we're just going to wait for the final design and continue to find ways. But I'd also add one more thing is like, we are not, like Brian showed a graph earlier, and it was the tip revenue and then the JitoSOL revenue. Like these are not just the two products that we're thinking about. We are actively investing in other areas and should see more on that later this year. But yeah, I guess that's kind of what I'll say about that right now.
Yeah, and then the other kind of adjacent topic, this is from Blockworks, was, it was referring to once MCP is live, kind of what happens to tips. But I would just say, zooming out more broadly, we have seen market share changes from tips in terms of like, if you look at like fees paid for transactions on Solana, tips were the dominant form, roughly 70% market share. Now it's roughly 30% market share for tips, and the rest are priority fees. That may evolve in the future. And then in particular, MCP may throw a wrinkle in kind of how tips work relative to MCP. So I guess, do you want to just talk maybe about how kind of what BAM is going to do with priority fees and how that fits in with JTO's economic model?
Yeah. So yeah, at some point in the future, we will start collecting a percentage of priority fees. And I think that just like aligns us more with the network long term. So yeah, I think you'll expect to see that. But also, as I mentioned before, like we're not just focused on tips or not just focused on JitoSOL. We think that there are opportunities for revenue and plugins, and then other things inside BAM, and then future products as well. So yeah, the goal is to we want to do less better, but also we want to expand our product suite into areas that generate high revenue. So we're going to continue investing in that.
Yeah, so it's not just dependent on tips in the future.
Yeah, I think it's like tips and even priority fees are super cyclical. And I think on a long-term time horizon, it's kind of a push and pull. So like as the network adds more capacity, the priority fees are going to go down. I think it's fortunately likely that people overpay for priority fees right now, but when there's a ton of capacity and blocks are not super full, priority fees will go down. And then you could like a year later, the priority fees could just go up a ton because there's more activity and then there's more capacity being added. So then the priority fees go back down. So yeah, I think we'll kind of see what happens. I think on a long-term time horizon, there are likely more revenue generating opportunities outside of just like priority fees and tips.
Yeah, makes sense. I think on a unit basis, kind of fees paid by Solana users should be trending down. We've probably already seen that significantly and kind of a lot of that. And like the focus for everyone in Solana, but I think BAM is a key role of that, is you need to grow the pie 10x, 20x, 100x over the next 5 years. And then people transacting on Solana can pay, de minimis fees, but the aggregate amount of fees paid are going to be very substantial. And that's where the puck is going, and benchmarking towards like people paying very, very high fee amounts to ape a meme coin in Q1 of this year. That's not healthy for anyone long term.
Yeah. And I mean, there's 2 points to add on that. I think the network's just gotten way more efficient. So like the work that our team's doing and Alonza and FireDancer and other people that are making pull requests and like contributions to these repos, the network's just gotten way better at processing a lot of transactions. So that's driven prices down a lot. And then I think, I can't remember exactly what Dan Smith from Blockworks said. There's like some tweet where it's like 1 million TPS at some price is like a few $1 billion in revenue a year. So that's the future that we're aiming for.
Yeah, think bigger. So next question, also on BAM, can be finishing up the BAM section in a little, but is Ian from Kairos Research. And it was, we saw in the earlier slides, BAM is roughly 18% of stake and has inflected nicely given kind of the recent incentives, as well as just kind of the software being kind of more battle tested on mainnet now after probably 4 months of operation. But the specific question is, what is the biggest hurdle for further BAM adoption today, especially for validators that have single-digit % of total stake?
Yeah, I would say a few things. One is Fire BAM. So a lot of people want to run FireDancer. We think FireDancer or FrankenDancer today and FireDancer in the near future. A lot of people want to run that. So yeah, FireBAM I think will be a big unlock. There's likely more work to do on like tips and priority fees inside BAM. So just making it more performant. Because yeah, that will help validators a lot. And then I would say the other parts are staker education. So there's a lot of apps that are interested in BAM, and we think BAM will just make apps better and like unlock new use cases. And I think everyone that has Solana, whether you're holding it or staking it, you want to see the price of Solana go up. You want to see more apps building on chain. And I think that educating stakers on this and also educating validators is pretty important for that. So that's work that we're going to be doing, and you'll see more of that coming out soon. I don't know if there's anything I missed there.
No, I think that all makes sense. And then next question is one we did not get submitted, but I'll just ask it because I do think it is top of mind, which is that we've seen a handful of competitors enter the block building market over the last year. How do you think about the block building landscape, and how will BAM differentiate itself versus other products?
Yeah, we really just focus on apps and growing the pie on BAM, and not, we don't really want to get into like these crazy timing games and things like that. So yeah, I think it's all about apps. It's all about users. So focusing on users is like our highest priority, and really focusing on market makers and what they want. I think because we are using trusted execution environments, which are basically secure enclaves, we can guarantee that the code that's running says what it, like the code that's running is public, and you can actually verify it. And I think understanding how the market works and knowing it's transparent is like extremely important for market makers and apps and traders. And like everyone on Solana. So that's like a key thing that really differentiates our product from others.
Yeah, agree. And I think something working to communicate better to the market is just kind of when you speak with application developers that are most impacted by the nuances of the block building market, that there's definitely kind of strong preference towards neutral and app first and user first solutions.
Yeah, for sure. And I think just like having it be more deterministic is something we're really focused on, as opposed to like having the algorithm change every block. I don't think is like necessarily the best thing for the market. So especially when those algorithms are essentially black boxes. So yeah, we're really just focused on apps, users, like what do market makers want, and I think that will lead to our success because like people want to see apps and market makers do well on Solana because that is ultimately what makes the price go up.
Yeah, absolutely. So I think next question is getting back into kind of JitoSOL domain. This is from the Blockworks research folks, and it is kind of, as I imagine, a lot of discussion today is on block building. They are curious about the LST side. The JitoSOL market share has decreased consistently since August 2024 from, call it, roughly 50% to 22% today. With newer LSTs, for example, 00 gaining significant traction, now almost as large as JitoSOL. Do you want to take that one, or do you want me to go for it?
Yeah, I'll touch on it and you can fill in any gaps. But yeah, I would say like we obviously like higher TVL and more market share is good, but I think it's more nuanced than that. I think the things that we track the most are like DeFi penetration. So how deep is the liquidity, and how deep is like our liquidity compared to others. So that's one thing, which I don't think any other LSTs are even close on that. You can get the best pricing on JitoSOL, like up to millions of dollars, which you can't really get on any other LSTs. I'd say the other thing is like the distribution of the holder base. So a lot of the SEX LSTs, if you actually look at the wallets on chain and like the holder distribution, they're very, very, very top heavy. Like the top 5 wallets control 95 or 96% of the supply. And so like I wouldn't really count those as competitors. They're kind of just single validator LSTs, and they don't really have any liquidity on chain. They're not being used in DeFi. And the main network effect is just from like having the distribution at the SEX level. It's like the KYC users and all that.
Yeah, for sure. I mean, I think they're LSTs in the literal sense, in that they are using the same program as JitoSOL for how their token is deployed. But are they competing? Like, have we seen in like decreases in JitoSOL holders that are transferring it to something like a centralized exchange token? No, because those are just effectively like a substitute. That the LST contract is a nice wrapper for what they are trying to accomplish, as opposed to like JitoSOL users aren't deciding between those two. At the same time, it is a huge market and it's not to be ignored. So part of the reason for the directed staking push that I discussed earlier is finding ways for them to keep that stake and not have to manage their own LST and get all of the benefits of the network effects of JitoSOL. Can say it is not trivial to have the level of integrations, depth of liquidity, and all of that in JitoSOL. And so I would say it's upside optionality, but it is not, as I think of it, accurate to say that like JitoSOL is losing market share to those, because that TVL was never in JitoSOL originally, but it is an opportunity to grow there.
Yeah. Yeah, I think the directed staking will help just align JitoSOL with these stakeholders, like these large institutions that have lots of SOL that also run validators. So yeah, they will basically be able to hold JitoSOL and have it go to their validator, so they get the best of both worlds. And then all the ETF discussions and other distribution partner conversations that we're having will help grow the JitoSOL market share.
Yeah. And then, I mean, related question from Blockworks is maintaining or growing LST market share still a priority for core contributors? If yes, what are the concrete levers to do so?
Yeah. I mean, this is more your area, but I would say that the institutional push is, I mean, these institutions aren't startups like us. They can't just like pivot on a dime. There's a lot of due diligence that they have to do to understand the LST, and there's a lot of education on JitoSOL. But even like zooming out, like just Solana education, like why should investors be interested in Solana? So those are very, very long cycles, like many, many months, or even more than a year. And so there's been a lot of stuff going on behind the scenes that will come to fruition, I think, in the first half of this year. That it's just been a very, very long effort. There's a lot of stakeholders, and but I think that's something that we can do better than the other LSTs, just because like we have multiple people dedicated to it.
Yeah, no, I agree. I mean, I would say there's nuance there about like JitoSOL TVL is a key KPI, but it is not an ultimate North Star in that sense of like, for a protocol that has expenses as well as fees, needs to be cognizant of kind of what is the expense. So like it would be trivial to grow JitoSOL TVL a lot by like, a new airdrop, a bunch of incentives, like all of these things, but it needs to make sense on a unit economic basis. And LST unit economics are good at scale, right? I mean, it's the biggest contributor to Jito Network's fees, but it also, you shouldn't prioritize growth for the sake of growth if it isn't kind of high ROI and also driving broader goals for the Jito Network. And so I would say that's just the nuance. I think there are a lot of good opportunities to grow it with very positive economics for Jito Network, but it is always a trade-off, right? I mean, an analog is like Web2 SaaS companies. They spend all of their money on like Facebook ads, but their users don't stick around beyond 2 months and they just burn through all their money. Like that is not the case with JitoSOL, and it's important to stay there and be diligent about where you invest growth efforts for a protocol like JitoSOL.
Yeah. Yeah, we have a ton of data on this. I'd really like to see more data published that Paul works on. But yeah, we have a ton of data that we've been looking at from liquidity mining and all that shows like how long people hold JitoSOL and different liquidity pools and how our incentives working on growth and all this stuff. So yeah, we're definitely looking closely at that. And then yeah, I think just to like reiterate, the goal is to build revenue generating products, and like BAM and JitoSOL are not the only products that we'll ever have. And we think there's a lot more opportunity, or like a lot of additional opportunity in other areas. So you can expect to see more investments in that.
Yeah, absolutely. And I think that is the perfect place to close it out. So again, appreciate everyone for spending 50 minutes listening to us. We hope this is useful for the community. Want to continue to invest and keeping you guys in the loop. And it's a two-way street. Like we want to work with you. There was a lot of room for growth. 2026 is going to be a very big year for Jito across its product suite and overall. And so this is, trying to keep you abreast. Let us know how we can do better. Let us know ideas for ways to kind of, for yourself to contribute. Kind of, we have different teams now around the world educating people about Jito products, with the Jet team in Europe and also in Korea and Hong Kong. And so anyways, there's a lot going on. Really appreciate all the support we've gotten from the community, and we are trying to double down on that in 2026. So thanks again for listening, and we'll talk soon.
Thanks, guys.